Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we take a look at the markets this week, let's start off and recap what happened and look what's going on first on the cash hog side of things.
Yeah, so we've had actually quite a mixed bag as we look this week. Cash hog prices down about $1 for the week. When you look at what's happening to the pork cutout value, it's actually up $1.90 for the week, and that's 8.7% higher than where we were a year ago at this time. But I remind us that much of the strength that I think we've seen this week has come from pork bellies again. So we saw a period of time where pork belly prices moving lower, I think, hurt the pork cutout value. Pork bellies up about 10 cents for the week, puts them back above where they were a year ago at this time. So helpful in terms of what we're seeing on the wholesale value of the pork market. Futures markets, lean hog futures were also down $3 to $4 for the week as well. So a little tougher on the future side than it was in cash or wholesale pork markets for the week. Very similar situation on the cattle side. Fed cattle prices, I would say they were flat for the week. Feeder cattle steady to 10 higher. Really some good demand, and I think you saw Feedyards who took advantage of higher fed cattle futures last week, interested in making sure those feed yards were full. So good prices on feeder cattle this week. The choice beef cutout was up $5, so that's now putting the choice beef cutout 14% above year ago levels. And you can look at loins up nearly $13 for the week, driving much of that gain. Just as we talked about lower lean hog futures, we have also seen now cattle futures move lower as well. The feeder cattle futures market down nearly $7 for the week, while fed cattle futures also pushed $7 lower. So after what was a very good week last week, some weakness when we look at the future side.
Scott, as we take a look at those numbers, we've talked specifically about some things that are driving markets. Talk a little bit about what's going on with the belly demand. Are we looking at a seasonal side of it? Because we dropped off so much from where we were earlier in the year.
So I do think we are seeing some seasonal patterns there, as we've seen some strength now back in those belly prices. But at the same time, I think it's a market that for sure realized that the record high prices we saw back in the summer were probably not sustainable long term, and almost overcorrected to the downside when we started to move prices lower. And now I think we're getting back to where when you look at belly prices that are 8% higher than where they were a year ago at this time, that's pretty consistent with where overall pork cutout value sits, being up nearly 9%. So perhaps getting in a little better adjustment in those relative cuts that make up that pork cutout value. So I think belly's overcorrected to the downside. Now we're getting some correction back, just given where we are today.
I think it's pretty interesting, too, as we take a look at the direct cash cattle trade. We finished up really a lot earlier than we have been in the week. Most weeks we're waiting until late Thursday or even late on Friday to wrap up that cash cattle trade, and we look to be done, after Wednesday afternoon?
That's right. I think maybe some packers learned to move a little earlier this week, knowing it cost a lot more for those cattle the previous week, getting them out of the way. And again, as we've seen futures markets move lower during the week, I'll be curious to watch next week's cash cattle trade as well to see if we can see some weakness show up there after futures markets this week.
I think the big news this week, Scott, is we're going to talk a lot about exports. The USDA released its monthly trade data. And as we take a look at that, any big month-to-month changes as we look at both pork and cattle values?
Yeah, so I think when you look at pork, I'll start there and say September was roughly where we were last month and the previous year. And although we might say that's not such bad news, I'll say that's now 3 months in a row where pork exports have really kind of stayed at the same level we saw a year ago. And we know we're growing pork production, so we really probably needed to talk about more pork exports. So flat, maybe it's not the best news that we see on the pork side. When we look at the beef side, we have seen growth in terms of beef exports in September. So I think that's helpful to the overall mix. Some news I think relative to Japan is important on that beef side of the picture. In September, we sent nearly 74 million pounds of U.S. beef to Japan. So despite the larger tariff on frozen products, that September number sets pretty close to where we were back in July. We were at 75 million pounds of exports to Japan in July. So tells me we're pretty robust in that market right now.
Well, those look to be doing well, both. I mean, if we're not seeing a massive decline on the pork side of things, beef is holding on, but that's not necessarily the same news for the poultry industry. And that looks to be a little bit troubling out of this month's report.
Yeah, absolutely. So beef and pork producers may go, why are you talking about chicken trade? It doesn't matter to us, but it does. Chicken exports did weaken significantly in September. That's the third month in a row of below year-ago levels. We were down 55 million pounds on chicken exports relative to the previous month, and that's 67 million pounds lower than the same time last year. So roughly an 11% decline in the volume of chicken exports. So when you look at all three of those meats, we exported about 1.19 billion pounds of those three meats. That's 30 million pounds lower than where we set a year ago. And that's the first month we've been lower since June 2016. Let's hope that isn't the start of a trend of below year ago exports.
Moving on to reports to talk about and analyze a little bit. USDA revised some numbers in their November WASDA report. What are some things that we're looking at as we take a look at those 2018 expectations for beef, pork, and poultry production?
Yeah, so when you look at what USDA gave us on the production side, they increased beef production about 325,000 pounds, also increased pork and chicken production as well. So more production out of the WASDA report that we got in November.
Does that have an impact on us long term as we take a look at next year? Does it make us nervous about having to increase domestic consumption?
Yeah, so I think when you look at what USDA did to exports, which was to revise them down slightly across the board, and we increase production, then that means you and I get to eat more of these products in 2018. So it did increase per capita consumption about 0.8 of a pound to 219.6 pounds that you and I each will eat in 2018. That would shatter the record that we set back in 2004 of 219.3 pounds. So we're really pushing a lot of meat potentially at consumers in 2018. Yet when you look at what USDA says about prices, they didn't revise prices much at all. In fact, the Fed steer price was revised upward. So it tells you they're saying, looks like demand's going to hold with us here, and strong enough demand to push that higher consumption level through.
Everybody loves some bacon and especially good the high quality beef that we produce here in the U.S. Hopefully that holds on strong.
Absolutely. We really, this sets us up to demand has to stay with us. And I will continue to say there's probably more downside risk in these markets because of the supply side, but that strategy has not played for much of 2017 because demand's been strong enough to offset. When we go into 2018, this is no different. There's a lot more downside risk in these markets. We need demand to stay with us, or we'll see prices probably move lower.
Scott, does that also bring up the question, and maybe begs the question a little bit, about thinking about risk management tools for producers in 2018? I know we've talked about using genetics as a way for producers to manage their risk, but really, does it also mean maybe some managing input costs, managing some of those types of things to prepare for a potential swing in towards the downside?
So I think so, Megan, and I'd come back to go, it looks like to me Feedyards, for example, realized that fed cattle futures last week were very strong, and they took advantage of being able to lock in some positive returns. I remind many of our cow-calf producers across the U.S. that equally feeder cattle prices or even some backgrounding that might go on right now, futures markets look fairly attractive to lock in some decent returns. So I would hope some will at least take a look at those markets for a change. I think if you just stay in cash markets completely, that is a risk management plan, as we always talk about. It may not be a good one because we don't know where those cash markets go. And you just take let's say we lose the Mexican market for some reason. That's all it takes for what was going to be a profitable backgrounding situation to become unprofitable if you have it locked in. So I sure hope folks will change maybe where they've been historically not using those risk management tools and understand now's the time to be thinking about those more carefully.
Scott, consumer confidence came out today, and really not some great news looking at that report.
That's right. So if you look at the preliminary November numbers on consumer confidence, the index stands at 97.8 for November. That's 2.9% lower than where we stood a month ago. That also shows declines not only in the current situation, but also consumer expectations. So little worrying in terms of what we got out of that preliminary November report, both current as well as then what is ahead. And again, we can kind of piece some of this together and begin to get a little more concerned about growing meat supplies against a potential weakening of demand if this consumer confidence report is at all correct, starting to show us there's a few clouds on the horizon.
I will say too, Scott, as we take a look though, to talk about not necessarily consumer confidence, but as we look at the Ag Economy Barometer, which was released this week from Purdue, it shows another peak a little bit, or a little bit of a jump again in how producers are feeling about what's going on with the ag economy.
Yeah, so I do think, it's for many producers, it's nice to have the crop in the bin. And I think that when you look at where we've been, in many cases, yields may have outperformed what many expected a few months ago. So I think that's been helpful in terms of maybe limiting the downside that some folks have faced. So I think that helps us in terms of what we see in that barometer. But we'll, again, wait and see there, as well as we've seen some volatility in that barometer over time as well. And it seems to me until we get close to planting season, that'll be the next time we start to see potential some moves around that could either be positive or negative, just depending on where those crop markets sit at that time.
Scott, to wrap things up this week, fair to finish returns came out from Iowa State, and it looks like producers are looking at a little bit better numbers for October.
That's right. So we don't need quite as much red ink out of our red ink pen this month. When you look at the numbers for October, only lost $1.18 per hog according to those Iowa State returns. That compares to $12.68 in September. Looks like we're going to finish the year with a profitable year. When you look at year to date, we're actually showing almost $15 profit across all months that we've seen through October. So some good news. And when you look at that October estimate, I'll say a lot of it has to do with just hog prices were stronger than we anticipated. Another $4 a hundredweight in hog prices certainly helped to limit the red ink that we saw this month in those Iowa State returns.
Scott, anything else this week?
I think we've covered the important topics for the week, Megan.
Next week, a couple of big reports that we'll have out to take a look at. What are some things we're watching for?
Yeah, so midweek, we're going to get another shot of where retail meat prices are. That will come out on Wednesday for us. And then we're going to finish next week with another cattle on feed report. So we'll see what placement numbers look like when we get the report next Friday.
And another expectation to see just how big this cow herd is going to look like.
That's right. I expect placements will continue to be running above year-ago levels, and let's hope it's not so big that we don't find some pretty bearish news out there at the end of next week.
Scott, have a great weekend. We'll talk to you next Friday.
You too, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.